Good afternoon, everyone. This is Ronnie J Cole II with EXP Realty here in Georgia, and I'm going to talk to you today about several economic factors which are going to affect us going into 2021. These factors are going to be from the presidential election, unemployment numbers, mortgage and student loan forbearances, which are going to greatly affect a lot of folks. So stay tuned. So welcome back, everyone. So if you haven't been hiding under a rock, which I hope you guys haven't, which you probably wanted to, after all the elections and ads that's been going on, probably you're tired of it, and I know I certainly am. But this past weekend, we actually just had Joe Biden to now be accepted as the president-elect, as well as Kamala Harris as the vice president-elect for the United States. And so no matter what side of the aisle you may be on, this will greatly impact our economy. And I just want to kind of talk about a few facts and some things that are happening and some numbers which may affect you, your family, and even more so your ability to purchase a home in the future in 2021. So the first topic I want to talk about is unemployment. Based on October's numbers, unemployment actually rose by 638,000. So there were 638,000 jobs that were created in the month of October. And so that's actually really good. If you look at it, the unemployment rate declined to 6.9%, which is 1 full percentage point less than it was the previous month. So with that being said, we're actually moving in a good direction in terms of people starting to get employed in their economy. Now, there are some caveats because there are people who may be taking jobs where they may have had a full-time position, but now they're taking a job where they're only working part-time. So there are a few nuances to take into consideration, but still, people are getting jobs. It's actually some numbers I have for you. It shows that unemployment persons fell by 1.5 million last month to a total of 11.1 million. Now, that's great, but I want us to always remember the measuring stick is that back in February, our numbers for our unemployment rate was 3.5%, and it was a total of 5.8 million people. So we're still double what we were in February, but we've been showing a continuous decline over the past 6 months. And as we continue to get COVID-19 under control, I'm sure those numbers will obviously get lower. The second thing that I want to talk about is just mortgage and student loan forbearances. These two topics are huge, and all of this is going to kind of play into my overall thought process on what may or may not happen with the economy. So if you don't know, the mortgage loan forbearance is basically a way for folks who aren't able to or who weren't able to pay their mortgages. It was a way for them to take maybe like a pause or a break. When you initially had COVID-19, there are a lot of people who actually took advantage of that particular program. Now, I will say I am not a huge fan of it, but I understand if you had certain stressful economic occurrences going on at that time, you had to do what you had to do. The reason why this is so important is because with the mortgage loan forbearances, the numbers have actually been falling. But what I'm going to tell you is I actually did a little bit of research, and the numbers are still quite high. There's an estimated 2.9 million homeowners that are in forbearance plans, and approximately 24% of the total loans that are in forbearance are in the initial stage. The initial stage is when you first apply for forbearance. You get 6 months, and you get 6 months to say, okay, you're not going to pay, and you're working out something with your loan servicer, your loan provider. Well, there are 75% who are in the forbearance extension. And so how it works is you originally got 6 months. And then if you found at the end of that 6-month period you were unable to pay, you got an additional 6 months. You got that forbearance extension. There are 75% out of that 2.9 million. That's a lot. That's a lot, folks. And if I just pull out my trusty calculator, and if we look at 2.9 million, and we're gonna do 75% of that, oh my gosh, that's actually 2.1 million, 2.175. So 2,175,000 that are in the second stage of that forbearance extension. So this is actually getting ready to probably come to a head towards the end of this year and going into the beginning of next year. Now, I'm no financial economist, but I try to look and study statistics and numbers so we all know where we are. So this could potentially mean that we'll have a lot of properties that if people can't work out some sort of deal, there may be a lot of properties that are coming on the market because people may not be able to catch up. And the reason I say that is because with these mortgage loan forbearance programs, you have to work out with your loan provider how you're going to repay at the end of that forbearance. That forbearance could be whether you repay in, installments where you're paying your mortgage payment every month plus an extra 50% or a quarter of what your mortgage payments would be to try to catch up. Or it could possibly be in a position where you might have a balloon payment where at the end of that forbearance period, your certain loan provider might say, well, you need to pay us all this money back. This is huge. You need to make sure that before you get to the end of this program, that you call your mortgage loan provider and that you know where you are if you have taken advantage of this mortgage loan forbearance program. So this could potentially be a huge driver of us seeing additional properties on the market towards, I would say, maybe February, March, April, some time frame. So it's not great, but this could really be huge. We could avoid a huge problem with this if we get our Congress and we get our newly elected president to come together with some sort of additional COVID-19 relief package. Obviously, it's not going to be as big as what Democrats want with the package that they voted in the House of Representatives, which was $3 trillion. And our Republican Senate wanted to do a $1 trillion bill before the elections took place. So I'm hoping that with Biden being the president-elect, he can come together and maybe bring together and say, okay, guys, we got to meet in the middle in order to help the American people out. On top of this mortgage loan forbearance, it ends December 31st because this was actually a program that was put in place under the CARES Act, which was passed earlier in the year due to the coronavirus. But there were still mortgage forbearance programs before the CARES Act, but this was kind of like something that they pushed and added to that CARES Act bill. Another one is this student loan forbearance, where this is actually ending December 31st, 2020. So for folks who may have lost their jobs and not have been able to continue with their student loan payments, then, they actually automatically placed you on that deferment if you had a federally backed student loan. If you had a private loan, then that did not happen. The private loan was like, we still want our money, and you had to contact them directly. And in some cases, you have to call them every single month to say, hey, I need to put this on forbearance for another month under the extended CARES Act that President Trump actually signed into law. About a month or 2 months or something like that ago to extend those benefits, because it was originally supposed to end in September of 2020 of this year, but they got it extended out to December 31st. So that's going to be another big issue, which, if some people have been in certain industries, especially for my folks that were in like the travel industry, if you were in airlines, there have been a lot of folks in tech jobs, and I've seen all kinds of jobs. I'm on LinkedIn and I watch news articles regularly, and it's not just the people you would think. There are a ton of people who actually lost their jobs. And so not being able to pay your student loans and not being able to pay your mortgages could potentially end up in a very big deal come the beginning of 2021. However, if we can get some good relief measures in to try to kind of help float folks a little bit more until they're able to find employment or are able to find a cure that allows consumer confidence and allows businesses to allow their workers to get back to work, then I think we'll be okay. So those are a lot of different aspects. I tried not to inundate you guys with a bunch of information. I mean, it's quite extensive in terms of the knowledge and what you need to know in terms of mortgages and student loans, because all of this stuff can either hurt the economy or, if we act now, can save the economy. And I said a lot of these things because what I want folks to do now is, especially in a position, is I want you guys to make sure you're saving your money. Just because you don't know what's going to happen. With this whole period, now you have a lame duck Congress, and a lame duck presidency, where, they're really probably not going to pass anything major until a new Congress is inducted and a new president is sworn in January. Therefore, you guys need to be saving your money because you don't know what's going to happen. That's the biggest thing and the biggest takeaway. We don't know what's going to happen. I'm pretty sure we'll all be fine. Folks aren't going to lose their houses. There's not going to be a huge foreclosure crisis. If you're an investor, though, I will say this, that you may see in the coming months a 10 to 20% drop in pricing because of some of these things that'll be taking place. I know there's also a eviction moratorium which will be ending at the end of this year as well. And so for a lot of people who haven't been able to afford their rent in their apartment complexes, right now, legally they're not supposed to be able to evict you. However, I can't say that everybody's been following the rules, but legally they're not. So at the end of this year, again, that is going to expire if we don't get some type of additional relief bill or legislation in place to assist folks who haven't found a job. Now, there are a lot of jobs that are out there on the market. And I know it's tough sometimes when you've been doing something for so many years to try to find something different. But guys, we have to be fiscally responsible. You need to be saving right now because this is the time to save. For folks who actually had an emergency fund, when COVID-19 hit, it was more so of a slight inconvenience than an moment. You get what I'm saying? So this is why savings is so important. Even trying to save and buy a house, you have, the bigger the down payment that you have and that you've saved up means the less that you're paying for the property. So I just kind of want to talk about some economic factors. This is kind of like a over the ledge view. Again, I am not a financial advisor. I'm not an accountant. I'm not a tax advisor or anything like that. But I just kind of wanted to discuss some things which may be useful to you or for you to start wrapping your head around as we move forward into 2021. If you have any questions about real estate in our current market, please feel free to give me a call or anything, for that matter. I actually do a lot of research on this information. And because, if you're a first-time home buyer, I've been saying this on some of my videos, you can't even find a property right now. Because we're probably 40%, we're actually 40% down in terms of housing supply. So if we have 40,000 homes on the market last year, this year we have 20,000 homes. So for first-time home buyers, it's tough. For folks who may be looking to downsize from a larger property to maybe like a smaller, 1,500 square foot home or something along 2,000 square foot home, something along those lines, it's a lot harder to find. There's actually property in my neighborhood here. There have been two that have come listed on the market, and both of them have been were listed for under, I would say, I think 5 days before they were pending. And so, the time for properties to be on the market are going down tremendously as well. So that's a lot of info. Hopefully I didn't kind of give you guys too much, and then now you're like in information overload. But if you're looking for any of these numbers, I'll try to post some of these websites that I found a lot of this information on, so you can do your own research. I'm a huge proponent of that. And feel free to like my page. Feel free to subscribe, hit the notification bell, and feel free to comment if you think I'm wrong, or you think I need to look at some other numbers, or you found some additional facts. Please feel free to share those. I am happy, to get more information from different folks. So I thank you so much for watching, guys, and I hope you have a great day. All right, thank you.